A fierce storm has swept through the cryptocurrency market in recent days. Bitcoin, which had been trading around $122,000, suddenly dropped below $116,000 and briefly touched $102,000. Ethereum suffered double-digit losses while many altcoins plunged as much as 80%. Millions of investors were glued to their screens. Social media was flooded with panicked messages. So what caused the markets to suddenly turn upside down? At the heart of the story are the harsh winds of politics once again. US President Donald Trump announced that he would impose a 100% tariff on Chinese imports. This announcement ignited a new economic war between the two largest global trading powers. As in similar situations before, risk perception in the markets shifted instantly. Investors moved away from risky assets and turned to the dollar, bonds, and gold, which they viewed as safe havens. Cryptocurrencies also bore the brunt of this wave. Within just a few hours, billions of dollars worth of leveraged trades were liquidated. According to the data, $19 billion worth of positions were closed in a single day. In other words, the system essentially collapsed in a domino effect. Moreover, during this collapse, even one of the stablecoins known for maintaining a fixed value, USDe, lost its dollar peg. This amplified the panic in the market. Even the safe havens of crypto were now shaken. But the real issue is that this event is not merely a political statement. This collapse demonstrates just how fragile the crypto ecosystem still is. Even the slightest uncertainty in the global economy can change investor psychology in seconds. Yet blockchain technology theoretically promised a decentralized, independent, and resilient system. Reality paints a different picture. Cryptocurrency remains highly susceptible to the influence of global policies, central banks, and investor sentiment. Another issue is trust. Cryptocurrency was born out of the ideal of decentralized finance. That is, the goal was to enable free value transfer between individuals without the need for intermediaries, banks, or governments. However, at this point, a significant gap has emerged between this ideal and reality. Today, the main factors driving the market include government regulatory policies, security vulnerabilities in major exchanges, social media rumors, and even algorithmic manipulation. In short, a decentralized system is ironically taking shape in the hands of a few major players. So is crypto still reliable? The answer to this question actually depends on what you use it for. For those chasing short-term gains, this market is extremely risky, as emotions, rumors, and political news can suddenly turn prices upside down. However, in the long term, it is almost certain that blockchain technology will bring about a lasting transformation in the financial world. Today, central banks, governments, and major corporations worldwide are investing in tokenization, the process of creating digital representations of physical assets. This does not mean that cryptocurrency will disappear completely, but rather that it will evolve into a new form. So the question is no longer, will cryptocurrency end, but rather, which types of cryptocurrency systems will survive? My personal take is this. This decline is actually a natural part of cryptocurrency's maturation process. Just like the dot-com crisis in the early 2000s. At that time, hundreds of internet companies went bankrupt, but those that survived, like Google and Amazon, became the digital giants of the future. A similar process is unfolding today. Weak, speculative, and unsustainable crypto projects are being weeded out, while blockchain infrastructures with solid foundations and structures compliant with regulations are gaining strength. Short-term fluctuations will continue. Prices will fall, rise, then fall again. But in the long run, blockchain's establishment at the heart of finance is almost inevitable. Because this isn't just a money-making story. The foundations of the digital economy are being laid. So trust in crypto isn't fading, it's just changing form. The question now is no longer who will win, but who can build a sustainable system. If you want to be part of this space, look beyond the price chart to the technology, vision, and community power behind it. Because this market is no longer about buying and selling coins. This is the era of building the future of the digital economy.